Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to introduce Darren Sinden, market commentator at Admiral Markets. Darren, how the devil are you, sir?
Yeah, not too bad at all, Nick, thank you.
So it's the Wall Street Crossover Show, obviously a US holiday, 2 weeks of volatility. I read one piece of commentary over the weekend that in technical parlance, the Dow Jones is going into what's called a wave 4, which means it can go either up or down at this stage. What's your reading right here, right now?
Well, I'm not the man to talk to about Elliott waves.
And nor am I.
I have a colleague who's an expert on that, so I'll perhaps press him for a decision. But what I would say, my own personal view is that the price action since the sell-off has been poor. We've tried to rally without any real success. We still remain, as far as I'm aware, 1,000 points below the recent highs in the Dow. My own take is that we've still got lots of questions to answer. Some of those might be answered on the 16th of September when the Fed decides what it's going to do, in September at least. But I think I would stay cautious till then. There's trading opportunities obviously in this market, but I think you've got to be sensible, not have too much exposure, nip and tuck probably, and and don't go home balls out long, balls out short overnight, unless you've got deep pockets and a very strong constitution. Yeah,
well, dare I say, I'm pleased I'm not trading these markets at the moment. Okay, so we've got a number of slides if you're watching for the first time. Let's kick off with the first slide. Data released over the European session. So what's caught your attention this morning?
Fairly mixed set of numbers to date. Some good, some bad. So we'll start with German exports for July, part of the balance of trade numbers. These are month-on-month figures, and we've had some fairly poor or mediocre German data of late, but there's no getting away from it. This was an excellent number. So exports for July up 2.4% against the forecast gain of just 0.7%, and massively different from June's negative 1.1%. So I think that's probably one of the main reasons that the DAX has performed so strongly today. But the flip side of the coin for Europe was the actual balance of trade number for France. Yep. July came in at a negative 3.3 billion euros. That was worse than the forecast of minus 3.2 billion and well down on the prior read of minus 2.8 billion. So, problems persist in France. Remember, that's the second largest economy in the Eurozone and in Europe as a whole. And then, speaking of the Eurozone, we had another read on Q2 GDP. We look at the year-on-year figure here, and that was plus 1.5%. Now this was positive and ahead of the forecast of plus 1.2% and the prior read of plus 1.2%. So Mr. Draghi obviously spoke last week and and voiced his concerns. That will perhaps make him feel a little bit more comfortable, but it's still not a categoric, an emphatic recovery. And as we can see, and as we've been saying, it's still very patchy out there across the Eurozone.
Understood. So let's take a look now at the European movers.
Okay, well, utilities have come back into the fore. These are obviously stocks historically that have been associated with a defensive posture in the market, with their sort of annuity type income from what they do and their very defensive and bond proxy like nature. So two stocks here. United Utilities first here in the UK, ticker UU, 878.5. They're trading this morning up around 3.1%. And the respected US broker Bernstein says the stock is an attractive acquisition target for an infrastructure or pension fund, and it upgrades the stock to outperform. And then RWE, which is Europe's biggest power generating company in Germany, RWE the ticker there, €13.50, up 7.4% today. And the French broker Kepler Chevreux has upgraded the stock to hold, flags the fact that the 51% fall it's suffered year to date is far too much, and it thinks there's an opportunity here. Interestingly, I note that because of that fall, the shares will be removed from the Euro Stoxx 50 index on the 21st of the 9th. So I'm wondering here if there's a bit of short covering as well, which has helped the price to rally by that 7.5%.
Understood. Okay, so let's move on to the next slide, the M&A, rumours and movers.
Okay, so we're in the world of insurance for today's M&A story. Mitsui Sumitomo, Japanese insurer, is to buy the UK-listed insurance broker and underwriter Amlin, ticker AML, here in London. They're paying around £3.47 billion for the business. That's equivalent to about $5.3 billion. Amlin shares trading up at 6.54, a gain of some 32.79% this morning. The bid It's worth £6.70 a share in cash, I believe, to only shareholders, and was a 36% premium to the closing level. This is the most recent deal by Japanese insurers who've been in acquisition mode this year, I think it's fair to say. In June, Tokyo Marine Holdings bought the US insurer HCC for $7.5 billion. In July, Meiji Yasuda Life paid $5 billion for Stancorp in the US, and Sumitomo Life agreed to buy Symmetra Financial for around $3.8 billion soon after. So the Japanese are really, expanding overseas as far as the insurance side of things is concerned. Amlin Management seem very happy to have got this deal. They're fully behind the offer, and they say they see similar corporate values and lots of synergies driving the deal. So no reason to assume that won't go through. And I'm sure if you're an Amlin shareholder, you're probably very happy with that 30% gain today.
A decent return. Okay, so let's move on to US data points to keep an eye on.
Very thin calendar, I'm afraid, today and for much of this week as far as the US is concerned. The only real item of note today, the consumer credit number for July, and then we're looking here at the month-on-month figure. The forecast is for credit of around $18 billion, but that's lower than June's $20.07 billion. Just to put this number in context, really we've been trending lower ever since June 2014, when we saw an outsized read of $26.6 billion. Still, there's good credit growth, but it's not been able to scale those heights since then. So let's look for at least an $18 billion number. A better number would be good news. Would probably be suit the interest rate hawks. Something below 18 might give comfort to the interest rate dubs, and it's because we're obviously comparing everything in these terms at the moment ahead of the Fed meeting in just over a week or two's time.
Understood. Okay, so let's move on now to the US pre-market movers and chart levels.
Okay, well, obviously we had an American holiday yesterday, so not much to report in terms of pre-market movers. However, one or two have caught my eye. First of all, ARM Holdings, listed here in London, but also with a listing in the US, and it's under ARMH, the ticker there, $43.08. They're trading pre-market up 1.2%. And really, I think this is a continued follow-through from the news last week that ARM will partner with IBM to set up a sort of suite of services and analytics for the Internet of Things, which is not familiar with the concept. It's the idea that everyday devices in our homes and elsewhere will be connected to the Internet and become intelligent in their own right. And this is seen as an area of potential growth for both businesses.
Okay.
And then staying with the technology theme, BlackBerry, ticker BBRY in the US, you either love this one or hate it. Had a troubled 2 or 3 years, $7.40 pre-market, up 1.65%. Again, continued gains on the news that BlackBerry will buy Rival's Good Technology for $425 million and focus on mobile software security. So it's really a change of tack for BlackBerry, moving away from the handset business and hoping to go back to focus on what it does best, which is delivering messages securely and quickly, and it hopes that that purchase will allow it to grow that side of the business and compete with the likes of Citrix Systems. And then in terms of levels to watch today in the indices, in Europe, markets are better. As we said, the DAX is sharply better, FTSE holding its own. 6,080 and 6,200 though remains our range. We haven't been able to break outside of that since Friday, so we'll see if that stays the same today.
Yep.
And in terms of the DAX, 10,240 now to the downside, plays 10,390 to the upside.
We're going to come on to the DAX in the last slide. S&P.
1911 plays 1940, so Friday's market was easier, and so we've moved our levels down here. And the same in the Dow, 16,100 plays 16,280. Still quite wide ranges, but the volatility is still around, so it's hard to pick tighter levels than that.
Yep.
And then currency-wise, euro dollar, just a slight tightening here, so we're now 111.14 on the downside for euro dollar, plays 111.80 to the upside. In terms of the Aussie dollar, finally have broken and stayed below the 70 handle.
Yep.
So 69.45 comes into the downside now. 69.90, which was a support level last week, now switches round to resistance. And in terms of dollar yen, 119.20 plays 120.20. The yen has weakened after the poor Japanese GDP
Numbers,
data
yep.
this morning. And then cable, I'm not sure if this says more about the absence of US trading yesterday, but we have bounced off the bottom. So 153.60 to the downside, plays 154.08 to the upside. So cable making some ground up again.
Okay, after a 2-week losing streak.
Absolutely, yeah.
Okay, so let's wrap up with the final slide. In focus, the DAX. A couple of words on this, please, Darren.
Well, the DAX 30 is up 2.4% today on a better balance of trade data, as we said, but I think we've still got to recognise that it's significantly below its 2015 highs, and indeed the 11th of August peaks from where we gap lower. A close above 10,350, which looks attainable today, and then the old gap support at 10,500 would be positives for the index. So I think I'd be looking at those two levels on the upside. However, I can't help but note that we have seen a dead cross posted recently. Much debate whether this was going to be a proper dead cross, but I think it's satisfied all the terms here now. The 50-day moving average, or exponential moving average in this case, moving down through the 200-day EMA line, but all three EMA lines also heading lower. So that is negative.
So a textbook sell signal for the medium term. It's a lagging indicator, though, isn't it?
Yeah, it is. It has to be said, and once you take it in conjunction with what's going on. So if we perhaps do get above those two levels and start to close some of the gaps in the chart there, you could think about negating that dead cross. However, if we see a failure again, I think the negative momentum could return.
Understood. Darren Sinden, market commentator at Admiral Markets, thank you very much for your continued support. We'll be back with you Wall Street crossover show tomorrow and see if this wave 4 on the Dow goes up or down. Okay, see you tomorrow at 1 o'clock. Thank you.